In this presentation, we will create another invoice after having entered the purchase order and the related bill, tracking the inventory item through the purchasing process and through the sales process. In other words, we requested the inventory, then we received the inventory, we entered a bill for it. Now we're going to be selling the inventory with the use of an invoice. Time to rise above the crowd with Sage 50 Cloud Accounting. Here we are in our Get Great Guitars file. We're currently in the customer and sales section. We're going to jump on down to the vendors section. Within the vendors section, we're tracking and following our inventory items. So we have the purchase order that we have created. I'm going to view the purchase order. So let's view the purchase order that had been created this time. And we want to take a look at the Gibson. So now we're going to be following through the Gibson item. So the Gibson, if we double click on it, is going to be this item, which we purchased for $598. That's the purchase price for the Gibson SB guitar. Closing that back out, closing this back out, we then have the bill for it. So we entered the bill. So if I take a look at the view and edit the bill and open those up, we then have the Gibson up top. So if we double click on the Gibson up top there, then we're going to have the bill that we paid for it. So there's going to be our bill that we paid for the $598. This is when the actual guitar was put onto our books into the inventory item. So we'll close this back out. Now we're going to follow this inventory item to the sales side of things. So we're going to go back to the inventory and services. We're going to be creating then an invoice for it. We're going to go back up to the customer and sales so that we can create the invoice. So now we're going to go down here, create an invoice, sales invoice. We want to take a look at a new sales invoice. So we'll make a new sales invoice. I'm going to maximize the screen for it. And we're going to be selling this one to Music Stuff Store, which I'm not sure we have yet. No, so I'm going to go ahead and make a new customer. So we'll set up a new customer. I'll maximize the screen here. It's going to be Music Stuff Store. A bit of a generic name here. Let's see if I can spell it right. We're going to take that on the name. I'm just going to put the minimum information for the name for our new customer. I'm then going to say save that. Let's go ahead and save it. And then I'm going to close that back out. And we'll put that up top, the Music Stuff Store. So we'll be picking that up here, Music Stuff Store. And then I'm going to tab through here. Tab, 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 tab. This is going to be for 012620. There's going to be the end date, and then we'll follow through and we'll enter the quantity. The quantity is going to be 1. The item is going to be a Gibson. What is it? A Gibson SB. So I see the GSB, Gibson SB. And so there we have that. It's going to be populate. And notice now the sales price is going to be that 777.4. So one of our more expensive guitars, as opposed to the purchase price we saw on the purchase order, which was like 500 and something. We're also going to have the sales tax related to it. So we'll apply the sales tax down here. Then what's going to happen when we record this, we're going to say that it is an invoice. Therefore, the accounts receivable is going to be going up by the full amount of the 851. The sales is going to go up, but only by the 777.4 on the income statement. The difference is going to be on the balance sheet. Sales tax payable 73.85. Also, the inventory is going to go down by something like that 500 and something that we saw not on this form, but driven by this form, known by the fact that we have this inventory item. The item that we saw, the purchase price when we populated the purchasing documents, and then we'll see the other side going to the cost of goods sold, an expense type of account related to the selling of the inventory. Let's go ahead and post this and then check it out. So I'm going to just add a number here, just so we have an invoice number, and then I'm going to say save, and we'll say yes. Let's go on over to our trial balance. So I'm going to go to the reports drop down. We'll go into the general ledger, and we're going to be taking a look at the working trial balance. Let's go into that working trial balance. We'll maximize this screen, then take a look at the options within it. So we'll go into the options, specific, I'll say specific date, and let's bring this on back to the 31st. So we'll take it to the 31st. Include accounts with zeros. I'm going to remove that, so we only have the accounts that have numbers populated within them. So then we got the accounts receivable. It's going to be increasing. Double clicking on the accounts receivable. There's the Music Stuff Store. There's the 580 or the 851.25. I opened the wrong one. I'm going to double click on this one. That's the one I want. And then the bottom line number, that includes the sales tax. That's the accounts receivable. I'm going to close this back up, The other side then going to the revenue account down below. So if we go on down to the revenue for the sales and we double click on that item, we're going to see the sales price of the 777.4. That amount is not including the sales tax. The difference of the sales tax, closing this back out, go into the payable account. That's going to be the sales tax payable. So sales tax payable, double click in the sales tax payable, 73.85 there. Closing this back out. Then we've got the inventory. So we're going to go into the inventory. Inventory is going to be decreasing by in this case, the 598. So if I double click on that 598, then we're going to have our inventory item that is not included on the invoice, but has been driven by this item here, by the item. If I close that back out, you'll see a trend here now. We've got the purchase of the inventory, of course, and then the sale of the inventory. We should see some kind of trend that happens. Now, when we do purchase inventory, oftentimes we might purchase bulk of inventory, so it's not going to be a one by one kind of layout. But here you can see that purchase, and then you can see the payment for it since we just bought one inventory item very clearly. That, of course, is going to be the process in general for inventory. Begin inventory, the cost of goods sold calculation, you'll recall, is beginning inventory plus purchases minus ending inventory. In other words, on the perpetual system, we've got the inventory going up when we purchase it and then going down every time we make a sale within it. If we go and then close this out, the other side is going to be going to the cost of goods sold, scrolling on down to that cost of goods sold, double clicking on it. We then have the cost of goods sold of that 598 as well. So I'm going to close this back out. Also note that the accounts receivable up top will be supported with another account by customer, tracking the receivable by customer. And when we think about the inventory, we're going to have another report for the inventory that's going to be tracking the inventory items for it. Let's just take a look at the accounts receivable report, just to check that one out. If we go up to the aged receivables, and I'll just keep the date as is for now. I think we had Eric Music fairly recently. So here's the balance for Eric Music at this point in time. And then here's Music Store Stuff, which was the 851.25 that we have set up here. Total in the ledger here, our sub ledger, our aged receivables, is that $2,263.80. That $2,263.80 should be reflected as well on the trial balance, $2,263.80 here. So that's going to be breaking it out by the aged receivable, breaking it out by the customer. So that's going to be it for now. Let's get out of here.